Basically, a simple moving average is an interesting signal because, as you can see, if we are in an upward trending market, we often have the prices above the simple moving average. And if the market trends downwards, our prices are below the moving average. And so we could, for example, imagine a trading strategy where we go, okay, as long as we're above the moving average, we're in a long position. And when we get into below the moving average, we're in a short position. Okay. Now, that's already complicated for a lot of people because often, short selling is, difficult, especially in equities. So one of the things we could do, for example, is to say, well, we have a trading strategy which simply enters a long position when we are above the moving average, and otherwise we don't have any position. Now you can see that this isn't always working perfectly, especially in sideways market. You can see that sometimes that can actually work against us a little bit. So how do we build a trading strategy and test it based on that? It's actually not too difficult. What we can do is we can change the prices into returns. So what we're doing is we're generating some returns from the prices. The way to do this is to basically, for example, use the PCT change function in pandas. So before we actually transpose it to NumPy, we just do .pct change. Okay. So, and then we can call this a return. Okay. So now we've got a return. And if we look at the return series, you can see that these percentage returns are quite small. This is like 0.07%, 0.02%, 0.03. So it's 0.003 basically means 0.3%. 0.005 is 0.5%. So they are quite small numbers. Okay. So in order to test if the strategy is working, what we need to do is we need to actually multiply. So there's two ways to build a strategy. One way is to have an event-based strategy where we say, okay, if our prices are above, we enter a long position, and if they're below, we exit the long position and we do nothing. Another way is to basically take those trading signals and we can do what's called a vectorized backtest. So what we need to do is to basically subtract these signals from each other. So we go prices minus SMA, right? And so what this does is it gives us a difference between them. And as long as the difference is positive, meaning the prices are higher than the moving average, we want to be in a position, right? So what we can do is we can say np.sign. So that basically gives us the sign of these, and the sign is positive when our moving average is, or when our prices are above the moving average, and it's negative when it's below the moving average. Okay. So let's just plot this just to see whether we're correct. pld.plot. And you can see here it jumps quite a bit. So let's just take the last 500 data points. And you can see here, it's sometimes below, a lot of the time it's above. Okay. So that's really cool. So now the question is, how can we use this to build a trading strategy? And so what we can do is we can use our returns. And remember, the return series is actually a bit shorter, or, well, it's actually not shorter, but what we need is to basically shift the return series to the left. Why do we do this? Because when we get a trading signal, for example, here, we basically get the signal on, let's say, time equals 0. But then when we enter the trade actually plays out between time equals 0 to time equals 1, t equals 1. And so our signal is actually from the previous period, but our trade is in the next period. So in order to do this, what we need to do is we need to shift our returns to the left in order to align them with the trading signal, because otherwise it won't work.